Want to learn how to invest in real estate? Of course, real estate investment is an exciting and potentially lucrative venture. Whether you're a seasoned investor or just starting out, there are strategies and approaches that can help you navigate this dynamic market. In this blog, we'll explore 9 effective tips to guide you on your real estate investment journey. 1. Buy a house and build equity over time. Buying a house is a fundamental step in real estate investing. When you purchase a property, you are investing in an asset that has the potential to appreciate over time, building equity that can be leveraged for future investment. Equity, direct consequence of investing in real estate. When you buy a house, you're becoming the owner of a special kind of valuable thing. Imagine you buy a cool new gadget like a video game console. As you use it and enjoy it, other people might also want to play with it. In the same way, when you own a house, it becomes more valuable as time goes on. The value of a house can go up because the area it's in becomes more popular, or because you make improvements to the house itself. Just like how a toy becomes more valuable if it's rare or has extra features. A house becomes more valuable if it's in a good location or if you make it better. Now, this increase in value of your house is called equity. Think of equity as a super cool point system. The more equity you have in your house, the more points you've earned as a homeowner. Imagine you buy a video game and start with 0 points. As you play and accomplish more tasks, you earn points. Similarly, when you buy a house, you start with a certain value, but as the house becomes more valuable over time, you gain equity points. The best part is you can use these equity points to your advantage. Just like using points to unlock new levels in a game, you can use your equity to make even more investments or maybe even buy a bigger, fancier house in the future. So buying a house and building equity means becoming the owner of something that can get more valuable over time, and you can use that increased value to do more exciting things in the future, including pulling cool cash out to invest more into real estate. 2. Buy a rental property and live in one of the units. Purchasing a rental property and residing in one of the units is a smart strategy. Not only do you have the advantage of being on site to manage the property, but the rental income from other units can help cover your mortgage and expenses. Investing in a rental property while choosing to live in one of its units is a financially astute and multifaceted approach in real estate. This strategy offers a plethora of benefits that can substantially enhance your financial standing and real estate portfolio. First and foremost, taking up residence on the property provides you with a significant advantage. Being physically present allows for more effective and hands-on property management. Proximity enables you to respond promptly to any issues, supervise maintenance and repairs, and ensure the property is well maintained, ultimately leading to a positive rental experience for all tenants. In addition to the advantage of on-site management, the rental income generated from the other units in the property can serve as a crucial financial asset, cash flow. This revenue stream can significantly offset your mortgage payments and other associated property expenses, effectively reducing your overall financial liability. Essentially, the rental income functions as a financial buffer, alleviating the financial strain on your personal finances and allowing you to channel more of your income towards savings, investments, and achieving other financial objectives. This strategy essentially allows you to leverage your housing situation to derive financial benefits while occupying one unit. You transform the remaining units into revenue-generating assets, effectively converting the property into a lucrative investment that has the potential for long-term profitability. This dual-purpose approach not only provides you with a place to live, but also positions you as a strategic investor, maximizing the advantages of property ownership and rental income in a synergistic manner. Another way you can maximize all of this is to just hit the like, share, and subscribe button and turn on all your notifications to be notified when we drop the next video. 3. Learn and leverage the BRRRR strategy. The BRRRR strategy, which stands for buy, rehab, rent, refinance, and repeat, is a powerful approach to real estate investing. By renovating a property to increase its value, renting it out for regular income, refinancing it to pull out equity as cash, and repeating the process, you can scale your real estate portfolio effectively. Number 4, use as little of your personal money as possible. Minimizing the use of your personal funds is a prudent approach. Consider utilizing other financing options like mortgages, partnerships, or creative financing to secure properties with minimal personal investment, thus maximizing your return on investment. Opting to use as little of your personal money as possible in real estate investment is a strategic move aimed at optimizing your financial gains. By minimizing personal financial input, you're effectively diversifying your investment opportunities and leveraging various financing avenues like mortgages, partnerships, and creative financial instruments. This approach increases your purchasing power, allowing you to acquire more properties or invest in higher value assets. Ultimately, it maximizes your return on investment by amplifying potential profits and minimizing risk, propelling you toward a more prosperous and diversified investment portfolio. 5. Be cautious of over-leveraging debt. While leverage can amplify your potential gains in real estate, it's crucial to exercise caution. Over-leveraging by taking on excessive debt can put you at risk if the market takes a downturn. Maintain a balanced approach to debt and ensure you can comfortably service your loans. 6. Focus on buying right. Successful real estate investing often hinges on acquiring properties at the right price. Conduct thorough market research, perform due diligence on potential properties, and negotiate effectively while getting the best deal possible. 7. Avoid high-end neighborhoods. High-end neighborhoods often come with a hefty price tag and may not always offer the best return on investment. Consider targeting properties in up-and-coming and undervalued areas where there is potential for growth and increased property value over time. 8. Avoid low-end neighborhoods. Similarly, low-end neighborhoods may seem attractive due to lower acquisition costs, but they can come with higher risk, such as higher crime rates and lower demand. Strive to find a balance by investing in neighborhoods with stable growth potential. 9. Focus on neighborhoods you can relate with. Investing in neighborhoods you can relate to or have a strong understanding of can give you a competitive advantage. Familiarity with local dynamics, trends, and demands can guide your investment decisions and help you make informed choices. In conclusion, real estate investing offers numerous opportunities for those willing to learn and navigate the market effectively. By employing the right strategies, being cautious with your financial decisions, and focusing on the right properties and neighborhoods, you can achieve success in the dynamic world of real estate. And if you enjoyed this video, you will enjoy so much more value from the video that just popped up on the screen.